On today's Hashi, I'm discussing housing inventory, home builder sentiment, and new housing starts. Today is Monday, May 19th, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Naples, Florida. Let me know in the live chat which market you are tuning in from, wherever you may be. Let's connect in the chat. I'm so happy to be with you guys. I mean, I am thrilled to be here. Last week was interesting, and I think I only did one hot sheet last week. Thanks, Jeremy Knight, obviously, for filling in on those miss. And then we had a total miss. I mean, here's my week last week. Internet modem blows up. Also had a funeral service one day morning I had to go to, had the BAM workshop. Just these are not weeks I want to duplicate. I want to be here with you guys. I'll be here all 4 this week with you on the hot sheet, and I'm looking forward to doing that. So let's get into it here on this Monday kickoff inventory day as we look at inventory every single kickoff of the week. This week being no other. Let's see where we're tracking week over week on national single family inventory. This is Altos Research. Love this data because it gives us a real-time view of what's going on. Where are we maybe heading in June, July, and August? How high can this go? Instead of doing the limbo, how low can you go? That was 2022. How high can we go this year? What new peaks are we going to set? We're at a higher point than we were at any point last year on inventory. Right now, we're 33% more than we were at this time last year. Of course, last year's peak was 739,000. This peak is right now at 767,000 on active single family listings. And again, up 33% from last year, 767,000. We're going to be crossing 800,000, in a couple of weeks, potentially, maybe 2, maybe 3 weeks. 3 weeks would be conservative. We jumped up about, 12,000, give or take, over the last week, up from 755,000. And, we've seen bigger pops here in the last couple of weeks. So, it could happen where we get up to 800,000 in 2 weeks. It could be 3 weeks, but we're going past 300,000. The only question I have is, do we have enough run in this summer with accumulation of active inventory to get up over 900,000? If you think about, October 2019, we were in the 900,000s. Could we get there by October of this year? October last year was where our peak active inventory was. If you go to 2019, which was a more normal market, we were already on the decline on active inventory. Okay. And there wasn't much funny about 2019 going into, the beginning of 2020. Remember, the 2020 election was the end of 2020. So it's not an election thing. I would have actually thought inventory, could have possibly started going down last year, election year. But it kept accumulating into October. Like, as we got closer, I'm like, geez, inventory is still going up. When you have uncertainty like that, usually it comes off. Nope. It kept going up. Tells you that there's going to be a lot of room to grow, even with the rest of this year. This summer is going to be the story of the inventory. How high can it go? And where does that inventory come from? Because where it comes from is going to be, those are going to be the markets with the most price pressure. Okay. Whether sellers want to realize it or not, if they're a real seller in this summer market and their inventory is moving up and they're beyond the 6-month neutral market range, they got some real decisions to make. New single family listings here over the last week. We didn't hit the 80,000 as we did the week prior, but we hit 76,000. That's above the 67,000 for the same week last year. So new listings coming onto the market. It's getting, healthier. It's not outrageous. It's not gangbusters, but it's pretty good. We'll take it. Here's what we'll really take. This date is interesting to me. Pending home sales. We're seeing a pop here over the last week, the last couple of weeks. Okay. 409,000, almost 410,000 versus last year's at this time coming in at 400,000. I mean, we've got a couple of weeks left based on the last couple of years here. We have a couple weeks left of weekly pending sales being at this level or maybe a touch higher before the decline for the rest of the year kicks in. There will be a decline coming in 2, maybe 3, maybe 4, if we got really lucky, on weekly pending sales. And that decline will persist and move further down for the remaining second half of the year, as it always does. Okay, as it always does, as it is expected to do. Nobody doesn't expect this to happen. This is what happens every year. Okay, so there's a couple more weeks, like closing out May. Man, if a real estate agent told me like I'm taking the last 2 weeks off of May, I'd be like, really? Why don't you wait till July 4th when everybody's on vacation? Well, I just like this time of year. Okay, but this is when the pending sales are happening at the highest level. You'll be, why doesn't anybody want to come see my open house? It's 4th of July weekend, dude. Like, you should have done it at the end of May when people were closing out before the summer. This is when you want to be in the game. Okay, if there's going to be a 2-week, 3-week period when you're working 12, 14-hour days, it's now. It's not 4th of July weekend. Heather, do I think this will change if interest rates take a dip? I do. So that's a great question from Georgetown, Texas realtor. Absolutely. That you'll actually see some like spikes like this if we get interest rates closer to 6%. Now, I don't think, say interest rates go to 6% and it's October, I don't think you're going to get up to this level, 409,000 homes in contract in a week, but it could. I mean, I don't think it won't get to that level, but it could see increases. Okay. Now, if we get to the end of June and all of June, we're trending towards 6, like I could see it extending out instead of the 2-3 week period. We're at the peak here. I could see it extending out a couple more weeks. 6% brings us meaningful activity. Okay. Now, despite the fact that we haven't been at 6% really, and we've been closer to 7, much closer to 7 all year than we've been to 6%. Mortgage purchase applications have done well. So to Heather's point, like if we get it closer to 6, you could see some real pops. We've had 9 positive readings, 6 negative readings. But you know what's interesting? This is the best piece of data about mortgage applications. 15 straight weeks of positive year-over-year data. And the rates aren't all that much better than last year. I mean, we had a day last week where we hit 6.99. That's 7. Okay. So 15 straight weeks of positive year-over-year data is really good. It's really encouraging. To Heather's point, we go to 6%. I mean, 15 straight weeks, you'll have the rest of the year straight up on year-over-year positive data. We're doing it at this level, closer to 7% in the 6.9s, which seems like we've just been there for months. And this is really good. It is a little bit of a surprise this year that we could be that high. And listen, the rates would be a lot higher if it wasn't for this chart. The rates would be a lot higher if the spread, while the economy has been seemingly stronger with, trade deals happening and employment hasn't moved yet. And, there's that background fear that it could break at any moment. But while the hard data has showed us that, wow, the economy is getting strong again, every week's a different story. But while that's been the narrative the last couple of weeks, look at what the spread has done between the 30 and 10 year. It's improved. And if it was at the same level of last year, we'd be like 7.5% on the 30-year fix, somewhere around there. So that's another good thing. And that's keeping this mortgage application data, the spread is helping so much keep us with a 6 in front of it, that at least we're getting the activity that we are. For sellers that aren't getting activity, more of them are reducing the price than the previous few years. 37.4%. This number is traditionally more like a third. And so we're elevated on the percent of properties with recent price reductions. Those sellers that are serious about getting the sale done this year, they're not testing the market. They're not dipping their toe out there with aspirational pricing. They're serious about a sale. 37.4% is a higher level than what we've seen. So price reductions are moving up for the serious sellers. We'll see that number, I would imagine, gets up over 40% as we get into these summer months. But we'll see how people feel about the summer. One thing we know right now is the big report on Friday, consumer sentiment. We're going to talk about builder sentiment here in just a second, but consumer sentiment slides to the second lowest on record as inflation expectations jumped on the end of the week there. So this is all, tariff driven. We've seen tariff deals. It's up and down. But the University of Michigan's report here that came out, I mean, look at this. Consumers anticipate rising unemployment and elevated risks of personal job loss. That's the highest level that we've seen since 2009. And we know what was going on then. So consumers, now these surveys are a little bit, we've had good data the last couple of weeks. So has the survey caught up to some of the good data? I don't know, but a lot of uncertainty is creating a lack of confidence, and it's not just in consumers. It's in the builders too. National Association of Home Builders reports that there is a soft spring selling season on new construction, and it's taking a toll on the builder's confidence. Okay, so we had another fall on builder confidence in May. It fell sharply. And now here's a caveat. 90% of the responses received in May were prior to the May 12th announcement of the U.S. and China. So at least NAHB is saying that. University of Michigan, they're not. Oh, they are. So interviews, it does say this from the University of Michigan's consumer report. It was done between April 22nd and May 13th. And then obviously, the China deal wasn't in the consumer survey. So again, rear view looking, it's soft data. Okay. Meaning hard data is unemployment is still ridiculously low. The numbers are what they are. Soft data is consumers feel a certain way. And is that going to impact the hard data? Is that an indicator of what's coming in the future? Well, I think if you ask consumers today how they're feeling about the future of the economy based on that China deal, and we'll see where that goes. It doesn't seem done, but it's heading in the right direction. We saw the stock market responses. That data, I think they feel a little bit better. The soft data could look better, and the hard data continues to kind of look good. But going into builders here, here's the key findings. They have a current sale condition that fell to 37 points. It fell 8 points. So current sales not doing good for new construction for builders. Sale expectations in the next 6 months edged 1 point lower. It's 42. And traffic of prospective buyers, that also dropped to 23. I mean, this is on a scale of 100. Their overall confidence, with those categories, it was down 6 points from April. It was 34 in May. I mean, look at where we've come in a couple of years. If we were in June of 2023, just 2 years ago, they were at least a 55. They were up over 50%. Builders don't feel good right now. They've got over 6 months of inventory. It's over 8. They're sitting on the inventory. Existing homes aren't. Builders are, based on where they've decided to build, based on the price points in which they have to build. and they're increasingly using sales incentives. The use of sales incentives was 61% in May. Remember what Ivy Zellman said to agents? She said, hey, agents, think like a builder if you're in one of these higher inventory markets, and you don't do it on price, do it on incentive. One of those incentives would be like buyer comp. Okay. You don't see builders right now saying, hey, we're not going to offer buyer comp. That'd be pretty silly when you're sitting on over 8 months of inventory. Like every incentive, any deal, any ability to increase deals, not lower deals. If you're going to open up a restaurant in a small little town, but you're going to require everybody to have a 3-piece suit, and you're not a Michelin star quality food, and you're in a small town where you really just don't have Michelin star customers, what's your traffic going to look like in the restaurant? If you want to create all these rules and restrictions to getting deals, then you're not going to incentivize people to come look at your properties. Then your traffic's going to be low. Builders know this. 61% are using sales incentives. None of them are saying I'm against buyer comp or I'm against a rate buy down if it makes the deal happen. They're not stupid. These are publicly traded companies. They want to do deals. Okay. You might get a home seller that leads with emotion. I don't care if it brings me more deals. I'll never pay a buyer agent comp. Okay. Look at less deals. This isn't a tactic. This is an obvious. Why do builders use incentives? It works. It increases traffic. Just be open to it. You don't have to do it. You can list your house at $500,000. You don't have to accept 500. Be open to what comes in. Increase your chance of making more deals. All this tariff talk. What is this? What does the Secretary of Treasury, Scott Bessent, always say? He's like, we want to have lots of conversations, not less. We want to open negotiations, not be closed off to them. They're not trying to be one way on this deal. It's volatile in the short term. It's pretty destructive in confidence scores, soft data. But the point is, they're open to discussions, open to opportunities. And they've shown that. That's how you have to be. That's how you have to be in this kind of deal making too. All right. Staying with builders, monthly new residential construction for the month of April. Here's your top line numbers for April. Building permits coming at 1.4 million plus, and housing starts coming at 1.361 million. Housing completions are coming in at 1.458. And you see here on the line graph, you're on YouTube. By the way, if you're on YouTube, best way to support content we're putting out here, just hit the subscribe and notification bell. You'll get notified when Hot Sheet goes live if you hit the notification bell. You can see on the line graph over on YouTube here that completions are down, permits are down, and starts surprisingly up a touch. So let's take a look. What are those numbers actually? What do they actually come in at? Building permits is 4.7% below March. Now, I would expect that. Okay. It's 3.2% below April. Permits, they're not bullish right now. They're not going to be bullish over the next 12 months. They're not going to be pulling more permits when builder confidence is low. Okay. Housing starts came in 1.6% above the revised March estimate, but it's 1.7% below the April 2024 rate. And single family housing starts made up 927,000. It's 2.1% below March. So single family down. Now, housing completions, 5.9% below March. And it's below the 2024 rate, 12.3%. So completing less now. And really all these numbers seemingly on single family are down for builders. Of course, you can separate that by looking at total starts versus single family starts. So total starts, not down as much as the single family starts when you add in multifamily there. All those charts, by the way, everything that we put out here on the hot sheet, you can find it inside of school. BAMX members, you get access to all of this stuff. So just going over the classroom tab, hitting the hot sheet classroom, and go to today. And all the charts used are going to be there for you so that you can use in your communication, email, text, whatever the case may be, right there at your fingertips. Show notes, obviously available down at the bottom, school.com/BAMX members. Take advantage of that. All right. Also, members, BAMX members, tomorrow, it's on your BAMX school calendar, but I want to remind you, we do our live role play tomorrow. We're doing it every Tuesday at 9 a.m. Eastern before the hot sheet, every Tuesday in the month of May and month of June. So join me, join Tom Toole, join Lisa Chennai tomorrow, 9 a.m. live role play with members. So members only right before the hot sheet. That's tomorrow. And then Wednesday, we have a public webinar. Spencer is referring to the BAM workshop from last week. Tom Toole had the quote of the workshop. Lunch is, we had this, we talked about a little bit on Knowledge Brokers. Lunch is for losers. Guys, don't go out on a 2-hour lunch today. This is an important time of the year. Start your week out right. But also Wednesday, we've got a public webinar. Chris Benjamin and Sheila Reddy. So Chris Benjamin, obviously know Chris from BAM Content, one of the best agents in terms of positioning listings that I've ever met. Sheila Reddy, CEO of Mosaic. They're gonna walk through a public webinar on really how to keep clients happy. Okay. I don't know how else I could explain it. This webinar is going to be some of the templates that they're using inside of Mosaic. So here are a couple of things. Psychology of what buyers really want, how you can deliver that, a pre-approval and funding strategy, and then a follow-up strategy. So all this stuff to keep clients happy, give them actually what they want. I'll also be joining them on that webinar as well. So that's Wednesday. It's totally free. That link is down below. Okay, 10-year coming in today to start the week at 4.521. I mean, this isn't fantastic. This is going to keep the rates elevated. This is the high point of the last 3 months starting the week. The U.S. debt was downgraded, so 10-year. That's where it's at there. Here to start the week. We ended the week at 6.92 on the 30-year fixed. The weekly came in at 6.81. Don't see a scenario where that moves down as we start the week up over 4.5 on the 10-year. But despite that, this will be the opportunity next 2 to 4 weeks on grabbing the volume of pending sales at the highest point. Go take that opportunity and work it, obviously, for those of you that are agents. All right, tomorrow, 9 a.m. members only, inside of school, BAMX live role play. 9:30, we'll be back for the hot sheet. That's East Coast time, obviously 6 and 6:30 for my West Coast friends. Until then, have a great Monday. And of course, toodaloo.